What's up, everyone? How we doing today? Or this evening, rather. Welcome to Market Kickoff with Nick4ATick. I am Nick. Good to see everybody. Happy Sunday. Glad everyone is here. I hope everyone had a wonderful, wonderful weekend. We are off to off and away to another likely crazy week. Double check that everybody can hear me, see me, that everything's coming through all clear. It looks like I got a thumbs up from Andrew in the chat that everything is looking and sounding good. So good start there. No hiccups to kick off our week here. But how is everyone doing? Did everyone have a great weekend? I laid pretty low. It's nesting season in the Nick4ATick house. The baby's due here in the coming months, which is going to lead me to have to migrate offices. So yeah, TBD on that. That's going to be a bit of a hiccup. I'm going to have to move my office upstairs. The nursery, actually, where you're seeing me record from and actually trade from day in and day out on TopstepTV, is adjacent to the nursery wall right here behind me, which I guess technically you guys can't see in this setup, but yeah, not probably is going to be the most ideal streaming setup for me. So I'm going to be moving. So likely we're going to, get a nice little, showcase of potentially the new office, the new space. Once I get that all set up here, I'm going to probably have to do that before she is born. So be on the lookout for that. I will most likely document that terrible fiasco that will be me trying to reorganize and restream and create the nice setup that I have here in a different room. So we'll get to that when the day comes. But I did have that news shared with me that that's probably the best thing for me to do going forward. So we'll get that taken care of. But let's talk a little bit about what's on deck for this week. I personally have a weird feeling about what's gonna potentially happen this week. I really do think we may get an outside move. I know we had all the volatility from the Fed, and we got our first cut. It wasn't exactly, I think, what everyone was expecting with a 50 basis point cut last week, and it didn't. When we kind of look at what happened with roll and everything else, like, we didn't really move a ton, especially on the S&P in the grand scheme of things. But I think a lot of that had to do with the roll week itself, as well as quarterly options expiration, monthly option expiration, and all the other shenanigans that kind of most likely came in to people hedging and the different things that transpired leading into the Fed's first cutting decision. So now that I would say some of that glue that was kind of keeping us wedged between probably various strikes in terms of, positioning by institutions and market makers just to kind of keep us in line. I think some of that may change a little bit this week as new positions are established and we're kind of unclenched from that options wedge that we typically would get at an expiration like that or during a roll period. So it's very, very possible that we may get an outside move. I have absolutely no idea. Will it be to the upside? Will it be to the downside? That's up for the market gods to decide, to be honest. But we'll talk about a few things of kind of where we're sitting, where we may go, and, some of the things that I'm looking at this week. If you're new to this show, this is not a trading hour, I guess is the first thing I can say. You're not going to expect me to jump into a trade here at the Globex Open at 5 o'clock Central Time. It's not my style, guys. But what this hour plus is really designed to do is give you a peek into the way I typically look at attacking a week. We go over market structure using volume profile. We go over some key levels, some key areas that I'd be interested, not necessarily in taking a trade in, but just more so watching and, kind of understanding what happens in the auction as price may or may not return or, ping that type of area. So we go over things like that. We talk about earnings. We talk about, what I'm seeing as far as the longer time frame options chain in terms of gamma exposure. And we even take a peek at what is on the economic calendar as far as news and data releases. Basically think of this as your Sunday night prep to help you kind of get exposed to what may happen this week, what's going to really go on, and just kind of keep things in the back of your mind. If you guys have been following kind of my story or the way I trade, price action kind of rules all my decision making, and that can change on a dime. If you guys remember the great trade the house account took on Friday with Coach DBA, Hogue, Andre, and Coach Jay, I was kind of feeding information to them in the chat. I think a bunch of us were. It was really a good team trade, but a lot of that had to do with things I was seeing 5 minutes prior to that, before we got into the trade. It shifted as soon, I would say in the minute or two leading into what Dakota was seeing to give him some confidence to want to get long down there. And that's how fast things can change in the auction, intraday, and why it's always important to not really have a bias. If you got really bearish at the beginning of the morning, you may have made some money, but if you didn't take profit, you probably got your face pushed in. And as we moved up a little higher, albeit a bit of a slow grind. And, I was seeing some things that made me want to take profit, I think, in some areas that the house account did. So that's kind of why we do prep. That's kind of why, I try to go into the week with a very light bias, if there is one at all, just giving me areas and ideas of, where we may be looking to kind of get into and transact with, if I even am going to take a trade at certain parts of the day or certain parts of the week. So that's kind of the gist of it, guys. We'll dive into that a little bit here. We'll watch the open here in a few minutes, or in about 9 minutes roughly. Just to get a picture of where we open at. Sunday opens, if you've never kind of actually watched the Globex open on Sundays, can be a little more volatile than, the typical 5 p.m. Central open during the week. It just tends to be a little more liquid, the spread may be pretty wide on NQ in the first few minutes as things kind of settle in. But like I said, we'll take a peek at that too. But to kick things off here, before I really get in the weeds of, at least my rough prep, or at least the first pass here, first look at ES, is we're going to do some analysis of kind of what the volume profile looked like for last week and where we may go this week. But as I'm talking, guys, as I'm interacting and kind of explaining some things, at least how I am, looking to attack this week, please chime in. Feel free to throw questions in the chat. We will grab them. We will get to them towards the middle to end of this session. So as if you have questions on anything I'm explaining during this session, just throw them in there and we will get to them shortly. All right. So looking at last week's profile, you basically had almost like a double, maybe even a third distribution, in the volume profile structure, but we kind of just chopped around this old balance range here on the left that we were sitting in. And keep in mind, guys, this may have been 56.60, 56.65 was the old U contract area that I'm now going to refer to as, 57.30 would basically be the top of that old balance range. And when I'm looking at this week, when I'm trying to think, hey, where would I kind of be looking to look more short versus long? The big elephant in the room would be, you could look at this, high volume node, this point of control in the longer time frame around 5,700 and say, I could absolutely be looking to short under that, long above it. Yes, likely a good place to kind of start. But personally, I don't know if the auction may get all the way down there unless we do get some selling. And in fact, if we do start selling, with some velocity towards the bottom edge of last week's low, I don't necessarily want to be the first person to long that. So for me, I'm looking to put my pivot for ES, maybe even a little bit higher towards the middle of last week's distribution and kind of this middle section. Actually, let me zoom in here and so you guys can kind of see what I'm talking about. This kind of low volume node right here around 57.30, 57.25, maybe even a little lower at 20 is most likely where I'd be thinking, hey, I could see a passive rebid off of that area. I may take a stab long there, knowing if I'm wrong, we're probably going to go to 5,700. But it'd be a good first attempt, somewhere around that 30 level, that 20 level, where potentially I could see buyers step in if they were to fail, let's say at last week's low, or we were to get an excess push down, Friday's low. If we were to get an excess push below Friday's low, where's the next place I might find buyers? somewhere between 20 and that 30 points. So that's kind of why I'm, at least in the early parts of this week, probably looking a little bit higher than 5,700 to kind of place a pivot or have a perspective of, where do I think buyers may step in and actively try to defend us. And if they do, and we were to, in theory, get some legs to the upside, we're talking air horns, we're talking all the fun again in this market that we've been in, and maybe even a repeat of July, where since we're trading at all-time highs, maybe we just start making new all-time highs almost every day. That is definitely a possibility. NQ definitely has more work to do. Obviously, the big tech and the Mag 7 more or less have been a little bit weaker than the S&P as far as just some resiliency coming off those lows from August. ES is pretty much just kind of rebound and been a lot more, I guess a little less volatile, if that makes any sense. The low, we haven't had as violent like 3% down days and, up days as you would have in NQ. You haven't really seen them in the S&P. So as I said, guys, for me, this kind of low volume edge from last week may act as a fine pivot, at least in the early parts of this week, at least, Monday or Tuesday, before we get into some of the chaos that's going to happen. And we'll get to that in a little bit. If you hate Fed speak, this is not a good week for you to be paying attention to the markets, because the amount of mouth breathing that we're going to have from our lovely trusted Fed members is on a whole nother level. The book tour, the world tour, whatever you want to call it, is back this week, and we'll dive into some of the important ones there. But Daddy Powell is not going away. If you missed his press conference last Wednesday, you're getting another chance to hear the lovely words out of his mouth. I believe on Thursday. So we'll talk about that too. Didn't mean to get too off track there. So yeah, that's kind of the gist for ES. If we were to lose 5,700, guys, I would probably take that pretty seriously, just given all of the volume in the auction up here, just going back even to last time we were trading at all-time highs. That is a significant high volume node. So if we were to lose it again after making a new all-time high and falling back into this distribution, if we were to start to lose last week's range or even the lows of last week around 5670, I would take that seriously, and I would not be looking for be the first person to try to long it once and if it does fail in that general area. I'd be much rather looking to long it in the 5600s, 5550, 5580s, in that general area. Some of these last 2 weeks of point of controls would be much better spots to potentially try longs than being the first hero to step in front of a potentially the steamroller if 5700 were to break. So just something to keep in mind. That's also a reason why I'm not looking to place my pivot around there, is just if we do break it, it could get it could be a day like this where you just get a pretty violent flush back toward 5,600. So I just don't want to step in front of that personally. I'd much rather, wait for buyers to show me something in the 5,600s or the high 55s before I'd be ready to try to, really step in front of it if we were to lose that zone. And let's see if we can jump into NQ here before the market opens in a few minutes. NQ is a little more interesting, and this is where if we get some legs, guys, there is no reason to be short, especially if the Nasdaq decides it wants to be a little more bid. And I'm talking going back to the same thing, those July, all-time highs and, everything above 2,100 is definitely a possibility if we get some legs over, 20,200 on the Nasdaq. The reason being, if you see this lovely low volume edge here between, let's call this 20,660 down to basically where we kind of, were the highs of this week. If we can start to build some legs above, that old balance range high over here around, 250 or anything over 200, guys, I'd be looking to take stabs long. And the reason being is there's not a ton of volume here. So if we do start to have a bullish start to the week, this could be off for the races for the Nasdaq, up to 600s. And God forbid, if we get some, positive news or no negative news, and the market still continues to bid like it was kind of doing towards, post the 50 basis point cut. I mean, there's nothing to tell me we could not have a 1,000-point week on the Nasdaq and go up to this old point of control, this old high volume edge up here around 20,800. There's just not a ton of volume, in the near term from this, recent low off those highs that to stand in front of us. So like I said, if tech is bid, by all means, guys, you should probably be long if it looks like it kind of did, Thursday and the second, or I guess, yeah, pretty much Thursday, and even the rebid that we saw after the initial lows on Friday. We're just kind of balancing and chopping, albeit higher prices, and we kind of have been. But realistically, I'm not getting, I wouldn't be looking to, go full port long on the Nasdaq unless we absolutely clear kind of 250, 300, I think would be safe. But I'd also be concerned and looking for possible rejection up there. So for me, to really get super, super bullish Nasdaq, I'm outside of, obviously my intraday scalps and things like that, I would want to see us trading above that 250 type level. And if we were to lose last week's point of control, this high volume edge here, if I'm looking realistically as a pivot, even for this week, it's going to be 19,900s as far as where I'd be looking to potentially look for shorts under, which is basically the Friday lows. If we start to trade below that, same thing, I'd be looking for a trip back down, into the 700s, the 600s, where we have just been chopping around for a century. It feels like on the Nasdaq, that a good old 19,900 to 19,600 level. And we did just open, I think we gapped up a smidge if my, pricing from Friday was correct. So we'll take a pause, and I will jump to a 5-minute for a second just to kind of watch this open with you guys. Oops, where did we go? There we go. Yeah, a nice little gap up. We already filled it back towards Friday's pricing. So for me, as I said, guys, above 200, 250, that's where I'd be looking bullish. But I would kind of expect the early part of this week to be some chop, to be a little bit of some indecision, but be on the lookout if we get bullish out of the gate, just because, you kind of saw how Friday's close into the end of the day. So another week, though, given everything that's on the books, that anything can happen. That's why I'd be using, like I said, 19,900 ish, and what I say, 57.30 roughly on ES. If I'm, you're trading the indices, that's where good, at least I'd start the first part of this week. Not necessarily to formulate a bias, guys. When I always say pivot, it doesn't mean I'm looking too long and short above it. It just kind of is like where I would be leaning for areas to be defended by a buyer or a seller. If we're above that, I would expect buyers to continue to be in control, and below some of those levels, I'm looking for sellers to potentially initiate and take us down a smidge lower. Doesn't mean I'm looking to short or use that as a, personal long or short bias to enter trades. It's just a way for you, during market prep to kind of formulate areas, like I said, where you feel one side of the auction may have legs over the other. That's at least how I think of it. It does not give you permission to long or short at that level. All right, jump back over to my 1 hour here, and we're going to jump over to GC, everyone's new favorite toy, just because it continues to make all-time highs, and the recession trade may be on, which could mean more bullish moves out of, the good old savior gold. So we did last week, basically finally, whatever you want to call this, we broke out of this multi-week balance range here that once we made that new all-time high push above the psychological level of 2,500, you basically had been chopping around for weeks. We had this is 2 weeks, that's a week, where we kind of, just continued to base, use 25.10, 25.20 as, a bullish area of, interest. And we couldn't seem to kind of push over 25.60. Well, last week we finally did and broke that new psychological level of 2,600. And most likely, guys, I would be still leaning very bullish gold. I think this is a clear breakout. If we were to go back in time, I mean, we're now well over these kind of psychological number levels, and I wouldn't be shocked in, the coming months if we're making a run at 27, 28, maybe even 3,000 if, we do get some election volatility, or there is potentially an actual recession, or the R word is actually used by the talking heads of government that we have here in the United States, that gold could continue to shoot to the moon. I wouldn't be shocked by it. But it doesn't mean I'm telling you to long the all-time high. Absolutely not. You should be on the lookout for us to potentially fail this old area here around 2,600 and potentially come lower, maybe even go back and retest this old balance range, just like we did last week, where we came right to that kind of 25.50, 25.70, I think is where the bottom was last week. And we shot out a cannon and made a new all-time high again. So trading this in a breakout like that, you have to kind of be looking for like we said, with pivots, where do I see volume from the buyers come back in? Well, the first place you're going to find it is right around 2610. Looking at this high volume edge, as well as the point of control from last week on GC, that's the first most logical place you may find buyers. It could be a little bit higher. It could be in the 20s. It could be in the 26s, 27s up here. That kind of rebid off that Friday high. It's very possible. But you have to also just kind of keep in mind this full range and the fact that there was not a ton of volume traded, in the 2590s to 2560s, just given that we kind of blew through it once we, went and retested that low. So a rebid in theory could come at any of, about a 30 point, 20 point range there. So that, you'd be looking to potentially long it around 2600, like I said, 2610, maybe even the bottom here in the 95s. But if it were to go lower, I would not be shocked to see, meaningful buyers step in that general area, those 80s, those 70s, to potentially rebid. So do not try to catch the falling knife in that area. But if you see some consolidation, if you see some stabilization in that stabilization, in that price action, that's where you could feel comfortable longing it. Let's say if we were returned above 2600 again. So nothing crazy there, but yeah, guys, I'm pretty bullish gold, to be honest with you, and I don't trade it, but this is a pretty clear breakout. So look for, lower prices to potentially join along with that party, and buyers potentially this week to go see if we continue to make new all-time highs and maybe make a trip to, like I said, 2670s, maybe even 2700 in the coming weeks. So that's my read on a GC. Let's jump over to CL. I am thankful, I didn't trade it, but I am thankful that perhaps the bloodbath that was the last few weeks of trading crude may be coming to an end. Famous last words, I'm sure, Coach Jay and anyone else in the chat, that I may have just nailed and coffined a new low in crude. But we had talked about this last Sunday night, is that I was not interested really in trying to be somebody to buy this off old lows, in CL specifically, going off old contracts and, just way long time ago, older bottoms in this general area between like 65 and I think 69. It didn't interest me a ton to be one of the first people to try to buy this last week, or I guess when we were kicking things off, when we were trading in like the 67s, you kind of made a low there. I was saying I would not be shocked if it continues to kind of base in that area, but you pretty much got a rebid off of that last week and you got continuation this week. So same thing, same principles would apply here. This looks pretty dang bullish, at least for the time being. You could look at this, older distribution from a few weeks ago. That point of control area around 7250 is an area that I could see sellers potentially defending and trying to sell us back down. But as long as we are trading above, I would say 71, I personally would be looking for longs to, kind of see, do we continue to zoom out here, but go back a few weeks into July and potentially trade this wider range where we may have made a low down there at 64s. Do we kind of continue to trade in this longer time frame value range here? Maybe go all the way up towards 75, 76. And that is an area I would expect from a few weeks ago. Definitely most likely would be defended. So there could be a play here where, we're looking to long in the 71s for a trip at least to 7250, maybe even a little higher if we could get out of this, distribution from 2 weeks ago where we started to sell off from. But I would be definitely on the lookout if I was actually long gold for sellers to defend that 7250 general area, maybe even, 7170s, 72 even, as an area where I could see sellers trying to step back in and push us lower. But yeah, as always, with everything going on in the world, geopolitical and the like, be careful. It just seems like there's always something that just tends to move this market more than anything else. And that's part of the reason why I don't love to trade CL. In fact, I'm a terrible CL trader, but using volume profile, you can be a good trader in just about anything you decide you want to look at or want to trade, because the same principles apply. Where is the volume? Where is the low volume? Where are sellers potentially? Where are buyers? And using those levels just to kind of guide your decision-making, longs above, shorts below kind of thing. So yeah, That would be my read on CL. As I said, guys, be careful. It has been a absolute, whipsaw type price action in this for weeks. It seems like, even if going back to, end of August, where it looked like we may had kind of had a double bottom right here around the same general area, this 71s, and we made a run towards 75, and then somebody slammed the door. So with CL, given how it's been trading the last few months, just head on a swivel, as I like to say. Just be careful. Jump back over to ES now that we are open and we got some data. Let's just see. So trading, where did it actually open? I didn't see the first tick, but basically still trading well within Friday's range. What was it? What are we? Was it 74s? No, wasn't it 68, 69, 70 was like Friday's high? I can't remember off the top of my head. Let's see. Yeah, okay. So that's it for the big four. Let's jump over to a very quiet earnings week, more or less. Nothing here really jumps out to me as far as important ones that are absolutely going to move the market, but a few that definitely, can weigh on the larger, I would say, different industries within some of the, the Nasdaq, or basically what I'm saying is you have like Micron, which obviously can affect the semis. I think there's been a lot of bullish news out of the semis in the last few weeks, but I think I said this last week, but earnings season is definitely in the, whatever you want to call it, the last hurrah. There aren't really a ton of big names. We kind of just maybe get one or two a week now that are worth paying attention to until we get that full rotation back into the banks here in a few weeks as we get the, I guess the Q3. Yeah, I guess it'd be Q3 earnings reports. But Micron would be an important one to watch, just given how, all the whole AI narrative and how everyone is just sniffing glue on the, the semi names and things like that. So just keep in mind that they are reporting Wednesday after the close. And the other one that I would care about, unless you are, someone still holding BlackBerry for some reason and hoping for another squeeze, would be Costco. Costco still being such a bellwether and, a good indicator of just consumer spending in bulk. I think everybody is still, has been very bullish Costco. It doesn't seem to want to stop, and it still continues to be successful. They still continue to hold their hot dog prices very much the same as it's always been, and hopefully that continues. So that's probably the only two I'm even going to care about this week. Super, super light week as far as earnings. On the economic calendar front, this is where things get a little dicey. The important ones that we had the usual, like I said, the usual PMIs. We've got durable goods this week, which might be interesting to get a perspective on. We've got PCE this week. We've got GDP quarter over quarter. But the elephant in the room, the Fed blackout period is over. So you have Bostic speaking, you've got Goolsbee, you've got Kashkari. I can't even remember who are actual voting members at this point. I don't think it matters. They can all seem to say things that move the markets anyway. But we have not only a gaggle of them just talking this week about God only knows, but we have Fed Chair Powell at, what is that? 8:20 on Thursday. So right before the market opens on Thursday to give us a ton of volatility. And then further after that, you've got Williams, you've got Barr, and you've got Kashkari doing another one. So a series of different, Fed speakers this week to once again just give us headaches if you're in positions throughout the day. It doesn't seem like they're going to care because they're pretty much talking all week. But outside of the Fed speak, as I said, we got PCE on Friday, which is the Fed's old favorite flavor of important things to look at as far as raising or cutting rates. Now, obviously, that is shifting more towards the employment story. So you do have initial jobless claims as well on Thursday. But just based on the dot plot and then basically, or Powell all but saying, there's probably another 50 basis point cut this year, or 50 basis points worth of cuts this year, and perhaps even another 100 next year. It seems like they already have a game plan that, soft landing, mission accomplished, and all is well. So still very much, I would say, important to be paying attention to PCE. But since they already cut and cut more than I think the market, not necessarily the market, because I think, leading into Wednesday, the market was pricing in a 50 basis point cut, at least the majority of us were, but the banks were kind of behind on it. A lot of them were saying 25 basis points with the exception of JP Morgan, who did call 50 basis points. So I think we're still at a stage where there's more information to come, but the Fed just seems to, kind of be telegraphing what they're going to do next. And the market historically has not believed a word they're saying, but let's see if they do now, as they already cut 50 and said they plan to, at least in the dot plot, show another 50 basis points worth of cuts in 2024. So a lot that could happen and a lot of volatility that could be expected when you've got 1, 2, 3, 4, 5, 6 Fed speakers on Thursday. So if you were planning on taking a day off from trading, that's probably the day to do it. All right. So we're going to take a peek at some longer time frame gamma exposure options data here. This is our TraderAid models that's giving us the net and the gross gamma exposure on the longer time frame. So this is not 0 DTEs. This is basically everything at Friday close. So this would incorporate, expirations beyond the quarterly options expiration, the monthly one that we had on Friday. This is everything in the future. There's no expiration here. So this could encompass positions that are also, years out in theory with options. But still important to, always look at and have an understanding on where the big round numbers a lot of the time are. Are they skewed to the bullish side? Are they skewed to the put side? And what do they look like from a gross perspective? So on the overall net, the largest gamma strike currently is going to be sitting at roughly 57.55, 57.60-ish. Hard to exactly tell here. On SPX, keep in mind, these are not ES levels. These are SPX numbers, and the spread is pretty big. I can't remember because we just rolled. But the largest part of this would be saying that there is a lot of gamma exposure still to the north side. On the positive gamma exposure skewed towards, the higher strikes. So us continuing to move bullishly a little bit northbound. But when we factor in, let's say, the gross gamma exposure, so calls and puts together overall, this is where things can really act as magnets. I think that also kind of it's hard to think of it that way, but that's how you want to think of this data, where yes, you do have a pretty glaring, higher skewed call strike higher around 57.50. But when you factor in kind of the total, the gross, including the negative gamma, you need to also be looking and being, aware that 5,600 being the largest put strike down here, if you get some legs to the downside, that's where your eyeballs should be. So looking at the spread of whatever ES is in relation to 5,600 SPX is something to just keep in the back of your mind this week. If we get any, bearishness, if we get some weakness, if you get a sell into early parts of this week, where's a reasonable target? Be right around there. On Friday, during kind of the initial sell down, you were seeing a lot of 0 DTEs down towards that strike at 5,600. I thought it was a little outlandish personally, that I didn't think we were going to ever get that far, but it was something to note that there was a lot of interest on the 5,600 SPX puts during that kind of initial sell down. And with options expiration, kind of anything can happen. We didn't get that level of weakness. We did get a pretty violent range bound day on Friday, but when these things get legs to the downside or to the upside, and market makers and institutions are in theory rolling call strikes higher or pushing put strikes lower, like they were kind of during that initial sell on Friday, it's just something to always be aware of. So like I said, if we get some weakness, do be aware the largest negative gamma strike is going to be down towards 5,600. So someone do the math and tell me roughly what that spread is, and we could get an exact number. Obviously, it'll shrink slowly over the next quarter, but I don't exactly know it off the top of my head. So that's a couple things I'd be looking for as far as the gamma data itself. All All right, guys. And as I was saying, as we're going through this and continuing to chat through at least what I'm seeing, please continue to throw some questions into the chat. Andrew will help me grab them and we can continue to kind of go through them. I did see someone asking specifically about what I was just explaining. So the option strikes, let me jump back. So I mentioned it doesn't include Fridays. I didn't mean it doesn't actually include like Friday's data. I mean, this past Friday, this is a snapshot from basically the data at close. So the 0 DTEs in theory from Friday are now removed because this is basically where we were at the close. So those had expired, you know, for the quarterly options expiration, the weeklies, the dailies, everything had expired at that point. So think of this as where did the gamma exposure look at the closing bell on Friday for strikes that have, in theory, no end date. So there's no expiration for this model in theory because it encompasses everything on the chain. So Monday's expiration through, you know, let's call it 2026's December expiration. In theory, that's everything that could be incorporated in this because it's looking at the entire chain and all expirations. And then if you guys have been following or watching when I show this on Fast Market some days, we specifically look at the 0 DTEs, which would only be looking at that session for the SPX options that close at, you know, whatever, 3:15 p.m. Central on the day we're talking about. So this, when I say does not include Friday, I mean this is a snapshot of post-close on Friday of whatever was left on the chain. Hope that helps. All right, so we'll get to some questions here. And, oh, thank you. Someone said ES is roughly 60 handles higher than SPX right now. So thank you for doing the math. So let's take a quick second to go through a couple questions that have come in the chat. So, hey, Nick, can you give us the exact name of the volume profile indicator that you use on Topstep X? So on the right side of my charts, this is the visible range volume profile, or volume profile visible range rather. And basically what this does, if you don't have this on your charts, it's something that I like to use. I know not every trader loves volume profile, but it's a lot of how I trade personally. No matter what time frame you're looking at, whatever is shown on the screen, it will auto adjust the volume structure here on the right based on the candles that are visible. So I like to use it because, you know, personally, I jump from, you know, a 1 hour to a 5 minute to a 4 hour pretty regularly. So it just would allow me to quickly grab, you know, whatever I really want to see, even if it's just going back to, you know, Friday's range. I can get that full profile here, which was basically just a violent D-shaped profile on the session where we basically just went up, down, up, back, down, up, and up again. So that's kind of why I use it. And then the others are going to be the, what is it called technically? The fixed range volume profile. And this is one that you draw yourself inside of Topstep X. I believe, or I hope that the other one that where it can just auto start drawing, you know, the week by week, the month by month, whatever you want to look at. Which is, I think, a fixed volume profile is what it's called in trading views. So whenever we can continue to get new indicators inside Topstep X, that's one where in theory, I could just set this to show me a rolling 1 week and it's just going to auto populate the same way I'm drawing. But in the event that it doesn't get added or it's, you know, it's still the coming weeks until it is, all you grab is, oops. Sorry, gotta turn. Volume profile fixed range, and it basically grabs the drawing tool. And then in theory, I could grab up to even parts of last week and it'll spit out a new volume profile here and make my charts messy. But yeah, that's how you use it. Super simple. But that's how I've been drawing them since it doesn't auto fix or populate them yet. It's very easy just to do what I do, which is on Sundays when you guys do your prep, just grab to basically the week's range to your previous volume profile chart and you're done. And then it'll live on your charts as long as you have them inside Topstep X. Super easy. But the other way, like I said, if you're using TradingView or using something else, you would basically just select the time frame that you want to populate a volume profile chart. Hey, Nick, can you explain why NQ has lagged behind the Dow and S&P recently? How do you see this change this week? I don't necessarily know that it's been lagging. It just has been more exacerbated type moves. And I think when you get when you get weakness in tech specifically, because the Nasdaq is just so tech heavy, where obviously the Dow is a little more of a number of names and is calculated a little differently. And the S&P just has, I think, can hold up a little better when NVIDIA, let's say, is down 7% on the day, like I think you've seen at times. That can really weigh down the Nasdaq, where you would see, weakness in it, where, ES may be down 1.25% and NQ could be down 2.5% in the same thing. And yet they're almost similar weighting of those larger companies. It's just kind of the way that would work. I think you may even be seeing a little bit of rotation. I mean, I know you're not really seeing it because of what I think we saw so much bullishness in the semis and in tech after the cuts last week, but you're continuing to potentially see rotation out of some of those names and into some of the bellwethers that are in the Dow. Kind of that, I said this with gold, but you're seeing maybe that bit of a recession trade where you're seeing some of those more industrials, those other names, those other sectors that are more recession proof that are in the Dow kind of being, bid at times. So that's probably why you've seen more resilience of the Dow making all-time highs and continuing to look very bullish. And NQ, albeit still has had let me jump over to NQ, a good run since the August lows, but is still trailing behind both of those making all-time highs. But like I said, if we were to, let me jump out back to that 1 hour. If we were to get some bullishness in the early part of this week, I would not be shocked, like I said, to go make a return and kind of join the party with the others and, hit some air horns for the Nasdaq as well. It would not shock me if you get kind of over this high volume edge here in the 200s, the 300s, to go make a run, like I said, to that 600 area, to that 400 area, and potentially continue from there. But it really is going to depend on, how bullish can the semis and all the other big tech names go at this point? Because you really can't start that party in the Nasdaq without them. So you need to see NVIDIA probably track back over the split price around 120, which it's been pretty much resistance the last few weeks. In fact, I think we got over it at one point, and then once we fell back down, we've kind of been pinging that level, and you've had some passive sellers there. So for us to continue to get pretty bullish in there, NVIDIA's got to play ball, as well as kind of the rest of the Mag 7. Apple's got to get out of bed. It's just kind of been rain. You need all those big names to kind of do something, and they've been relatively indecisive at times. Sorry, that was a long-winded answer. And I am not I'm not a Dow trader, but that would be my read on kind of why. And that's weird. My thing was buffering. Am I still live, everybody? Andrew, if you can see me, are we still good, or did I completely cut out there? I'm going to pause for a second so that somebody can tell me we are still a go. Chat says I'm good. All right. Sorry, guys. I saw the YouTube chat and like it was buffering in my screen, and I was like, uh-oh, did I lose connection? And just went on a rant for 2 minutes and didn't see somebody telling me that it's frozen. So all good. It dropped a couple of times, but back now. All right. We are all good. Hopefully we are, there's no issues. But yeah, guys, that's my read of the week, I guess, is how I would be looking to attack it. As we had, kind of recap here in case people join late, I'm going to jump back to ES. Just because, personally, I mean, this is up to traders, guys. I trade ES a little bit. I do trade NQ a little bit more, but I build most of my market prep and my kind of plan for the week using the S&P. It just trades a lot more clean as far as establishing levels, as far as volume. It's just not as wiki as the Nasdaq, even though that's, my instrument of trade. But I was actually looking at my stats on my XFAs that I'm doing pretty well in, the ones you guys probably saw me take a payout in with Coach Dakota last week. I was looking at the stats in those, and my win risk reward, my win percentage, my average winner on ES is significantly higher in those accounts than NQ right now. So I may be just become an ES trader this week, just given that I clearly am getting wicked out and, ran over at times in the Nasdaq lately, despite not necessarily being wrong in some of my reads. It's just definitely been a little tougher to hit some of those at times. I hit a nice, long on Friday, but I've been doing better just trading ES lately. And I don't really have a good explanation for that outside of, I think I'm just getting stopped out less given the stabilization how stable ES can trade at times. So when I build prep, I typically would do that with ES because the levels just are always going to, just be respected a little bit more compared to the Nasdaq's levels, because you can just get wicked out, especially if you're trading, NQ and you're using, let's say, a 10 to 20 point stop, depending on your size and risk. NQ can move at 30 points a clip sometimes and just wick you out and then still move in the direction you were hoping for. So that's why I use ES. But we were talking at the beginning. So if anyone joined late, or was, kind of missed the first ES portion of this until the market opened. I'm still looking at this and thinking, 57.20, 57.30-ish, most likely going to be my pivot. So potentially, if we were to get some weakness, do we go take out Friday's low and find buyers at the 20s? And the reason I'm putting my pivot there is because if I was to try a long, let's say, off that area, I would know if I'm wrong pretty quickly. And that likely, if we were to lose, outside of an excess low and push back up, if we were to get some real weakness here around that level, if buyers don't step in, the likely path is going to be, a battle in Chop City around 5,700. So that's why I'm not really looking to potentially interact, between 57.10 and probably even the, 56.80s, kind of the lows of last week. I'm probably not looking to try to be the first person along this. I'd much rather let this old balance range kind of work its way out and then be looking to take longs, like I said, towards the top of that old balance range to be defended. And if I was to short it, I most likely would want us to clear that value area low from this balance range around 56.70-ish, which I believe would be 55.85, which was an old pivot, if you guys remember, from a few weeks ago. When I think on the U contract, that was an older pivot that I was using at times to kind of be bullish above, bearish below. So the same, it still applies here, albeit now on the Z contract, so roughly 60, 70 points higher. Would be looking to potentially clear this high volume edge late for sellers to kind of really show their hand that, yes, we are trying to send us lower, and then join along with them, like I said, in those 80s and those 70s for a trip back down towards, 50, 40, 56, 40, 56, 50 on ES, this low volume edge down here. And like I said, if we rebid off of 57.20s, 57.30s, this is where, I'd be trying to catch a nice long in that general area in the 40s to potentially go make a new all-time high. I think that was the trade we were kind of looking for in the house account. It was a very slow trade on Friday when we were in that. It just kind of was slowly drifting up, and you're waiting for that, almost like that punch you in the face type candle. And I just never saw it with buyers, which is why I was kind of screaming, I think, to Jay behind the scenes as well as in the chat, being like, I would peel some off here. It just doesn't feel like buyers are really pushing us the way that you want to see, where they just give you that like lights out kill shot sometimes that you get in a Friday session or a slow grind on a Friday. As you guys have heard me say this before, like that hold my beer type candle where they're like, watch this, and they just blow a bunch of stops and continue to move higher. You just didn't get that move on Friday, which was kind of shocking, but we did drift higher. So that is the plan for ES. Like I said, if we were to clear the 30s, the 40s, I'm expecting us a new all-time high, a new air horn to be hit. And below that, I would expect a battleground in the 5700s. And if we were to break that and go lower, going in to fill in some of this volume from these last 2 weeks, and perhaps find buyers again around 55.85, or perhaps even lower towards the previous week's point of control. So some of this value area down here, if we were to lose 5,700, is where I would logically be looking for buyers to return to the market. So that is the gist of my prep. I'm going to get to a couple more questions here. As I said, if you guys have any others, feel free to chime them in, throw them into the chat. Let's see. Nick, do you trade any YM? No, I don't. I probably should. When YM has kind of just been breaking out and not as wiki at times as the Nasdaq can be. I know Nick Dolby loves to be our YM trader. I know Anne Marie does. I know there's like 7 other people at Topstep in total that probably are trading it. I am not one of them. Although there are days where I look at the daily structure on a 5-minute of YM, and I'm sitting there like, with a red day in my back pocket on trading NQ, and then looking at the YM being like, what am I doing? Why did I not trade this? It traded so cleanly. It respected the previous day's value areas. It respected the opening ranges, whatever it was. It was a super clean breakout to the upside or a breakdown. And then, it tried to rebid and then failed off the 30-minute opening range or the initial balance low or something. It's like sometimes the YM trades that clean and I'm sitting there getting chopped up in the Nasdaq, and I question my decision-making as like, what the hell am I doing trading this thing? When you have others out there that are trading, I guess, as simple as that, where you really don't have to have any, really even be watching price action. Let's just say that, where it can respect levels almost like an algorithm would, or just it's bots out there just, respecting specific, market structure levels. So anyway, it makes me laugh sometimes. What are my volume profile settings? So guys, I keep this super simple. I use ticks. You can adjust the row size based on whatever, you were looking for. I keep my colors very simple. I've been trading this way for a number of years using volume profile. So the color scheme, the ticks, it doesn't necessarily matter to me. I just try to make it very simple rather than having like bars, to actually make it look like, areas where I can find, high volume edges and points of control, and, low volume nodes very easy from the eyeball. Because as we've discussed on this show before, when price is in a, let's say, low volume node, it tends to move very quickly from it. So we're either going to blow through like in this area down here on the right, or we're going to not spend much time trading there. So we're either going to blow through it or we're going to rebid right out of it. That's why I like to just quickly identify them. So for me, rather than having like big lines, with a number of, rows included in them, I like to see it almost by like a tick by tick level on ES so that I can quickly identify those low volume areas, those high volume areas. But these are my settings. But yeah, you can do number of rows and do a lot of rows or not a lot of rows. It's really up to you. I just like to visually, kind of see it almost as like one big bar. If you guys had ever seen my motive wave charts, it's just one giant color. I don't even care about looking at the value area high, low 70-30 breakdown, because it's just a visual for me. And it's the same thing on these. I might have my rows, a little bit smaller, but it's basically the same type of premise. There's no logic to why 3 rows, why 1 row. It's just, I can show you. All it does is just change the visual to just bigger lines, if that makes any sense, which, like I said, I like to keep it small so that I can really see, the low volume areas, let's say on by a tick, because I can physically see the low volume node, rather than being a range of a few points on ES, is all the way down to like 54s, 56, 54 is that exact level. So I know that even if we were to break 5,700, that you could potentially find, buyers to step in right there or defend 55s. It's just a way to look at it. But I usually keep it around 4, just to give me like one solid number. Because if you do 4 ticks, 1 point on ES, that would be the logic. So each one of those rows is a point. How do you remain so calm while trading, Nick? Part of that is just personality, guys. I tend to be an extremely calm human being, except in the car for some reason. That's where my, I guess, repressed rage comes out driving in the roads in Texas, where if anyone lives in Texas, you probably know exactly what I'm talking about. So yeah, I'm just a pretty calm person, more or less. I'm super like level-headed. I don't really get angry very easily. So yeah, it's just kind of me as a person. But I can't say I mean, I may look calm, but yeah, there's times when, you know, if I'm in a drawdown or a trade's moving against me, you know, that heart rate will tick up. I may look calm, but you know, there's some deep panic that I'm internalizing, which is probably why it turns into repressed rage eventually when I get behind the wheel of a vehicle at times. But no, guys, a part of this is if you're not having fun with trading, you shouldn't be doing this. So for me, guys, I like doing this show. I like doing fast markets on TopstepTV. I enjoy trading. I enjoy, you know, the learning behind different concepts, different techniques, different ways to understand the auction theory itself. Because everyone looks at it a little differently. So I enjoy kind of having a beginner's mind in this space still. So with that, it allows me to kind of continue to take in new information, not get like so skewed or so biased when someone offers a different perspective. And in exchange, it keeps me calm. It keeps me, you know, kind of loose, if that makes any sense. Like I said, if I'm having fun with this, whether I'm up or down, if I didn't enjoy it, if I'm always like, you know, very tense when I did this, what am I doing? Why am I doing this if it's not bringing me some aspect of joy? I have never laughed so hard with some of my trading buddies and friends in text groups and in Discords and other places. And, you know, it could be something as stupid as there's just memes and GIFs back and forth that just makes people laugh throughout the day, just things to keep it light. It's the same things we try to do on the show when we get like news breaks or when I'm an idiot and make jokes or being a smartass or sarcastic on the dang show. It's to keep it light. It's to keep people laughing. You don't have to take trading so seriously at times, because when you do, that's when it can become less fun, and that's when it can become a job, or you're trying to think of it as a job. I do this full time, and I don't think of it as a job. I think of it as, you know, a way for me to continue to make income and continue to live my life. But if I thought of it as like, this is what I have to do for a living every single day, then it becomes a little less fun, and I might as well be back in a 9 to 5, you know, working 5 days a week for Daddy Bezos, since he's making everyone go back to the office in that old world. So yeah, if you're not enjoying this, if you're not having fun, if you can't keep it loose and laugh and, you know, have a good time, then trading, and you're really tense and you're staring at the DOM and, you know, position moves against you, it's going to kill your psychology going forward. So be loose, have fun with it, and, you know, try to make a little money, guys. Don't take yourself so seriously, and just try to enjoy what you're doing and try to laugh a little bit is really what guides me in this world. Looks like that may be all of the questions. And I know we're coming in on an hour here, guys. If there are more things you want me to go into or cover, I'm happy to. Like I said, this may be an insane week given the gaggle of Fed speak that we're going to have. But I think this is a pretty simple week to prep for. I think there's a couple ways, you know, obviously there's only two directions we can go. We could obviously still chop and fill in more volume in different areas, but this is setting up definitely what I would expect with, you know, like I said, coming into a new quarter of options and, you know, a new month of options for October and into a highly volatile time of year given election season. I would not be shocked with, you know, the different Fed speakers and just different things that happen. And now that we're a few days removed from the actual first cut from the Fed, that you could finally get the real market move. That's why, in a weird way, guys, do not be shocked by a violent move out of, you know, last week's range, and respect it if it comes, because, you know, now that in the opinion that we may get, or we're not as clenched by options or other things that may have kind of kept us hedged and in a range from the last week, just given the Fed potentially doing their first cut. It wouldn't shock me that you see the real positioning for that dot plot starting, you know, in the middle of this week. All bets are off for the first parts of, you know, the early parts of the sessions in the start of the week. But I would not be shocked if you finally do get a move out of this range and it being respected. So We will see. I do think it's going to set up for a great trading week. Personally, I'm very optimistic on a lot of points to be had and a lot of good opportunities to get into some trades this week. I'm very excited. I hope you all are. Definitely could be a new all-time high. We definitely could go retest the lows of these, 2 weeks ago, the back-to-back weeks down here at around 5,500, 5450s. Nothing would shock me. And that's kind of the logic of how I'm going into this week, is just to be prepared for anything. And don't be shocked when the market does something very stupid, because I would not going to be surprised if there is a very stupid move that occurs this week with some of these new positions that are established with that dot plot, and how it may shape into election season and the volatility and the fact that, the VIX still is, despite us being at all-time highs, the VIX is still treading its head above water, and it has not gone back to the cemetery where it belongs for us to be trading at all-time highs. So head on a swivel, have some fun this week, and please trade safe out there, guys. Thank you for tuning in. I will see you bright and early tomorrow morning with Coach DBA, with Hogue, with Andre, probably MP, and everybody on the Fast Markets team. It's going to be a big week. I'm super excited. Thank you guys for all tuning in. Have a great rest of your Sunday. Go watch some football. I hope the Cowboys are still losing. They probably are. Cheers, guys. Have a good night.